Good morning, good afternoon, good evening, and of course, good night if you're in Japan, which is our topic today. I'm Nicolas Véron. It's my pleasure to introduce this new session of the Financial Statement Series at the Peterson Institute for International Economics. And indeed, our first speaker, Toshiyuki Miyoshi, joins us for Tokyo. So thanks very much for staying so late. Toshiyuki Miyoshi studied public law at the University of Tokyo. He graduated in 1991, and then he studied politics at Oxford University with a Master of Philosophy in 1995. He then had a career where he alternated between the Ministry of Finance in Japan, the International Monetary Fund in Washington, D.C., and after it was created in the late 90s, the Financial Services Agency of Japan, the Financial Regulatory Agency. Specifically, Toshiyuki started at the Ministry of Finance. He was the private secretary to the Deputy Minister for Financial Reconstruction, as it was called in the late 90s, basically for the establishment of the Japanese FSA. Then from 2000, when the financial reconstruction was completed in 2002, he joined the IMF in Washington as a senior advisor to the Japanese executive director, went back to the FSA, working on liaison with the Basel Committee, and then on communication during the great financial crisis. Then back to the IMF as senior economist in the Strategy, Policy and Review Department, back to the Finance Ministry dealing with international affairs in the later 2010s, and since 2020 back at the FSA, working on supervision. For a year, he was Deputy Director General for Supervision of Financial Institutions, and since July 2023, so for the last year, Vice Commissioner for International Affairs. In this capacity, Miyoshi-san deals with all the Basel Committee, Financial Stability Board, and other international fora on behalf of the Japanese FSA. Richard Katz studied economics at New York University, where he got his master's degree in 1996. And since then, he's been basically continuously writing about Japan, particularly as a correspondent of Weekly Toyo Keizai, special correspondent, alternating between New York and Tokyo. In 1998, he published his first book about Japan, The Systems That Soared, The Rise and Fall of the Japanese Economic Miracle. And last year, his latest book, The Contest for Japan's Economic Future, Entrepreneurs versus Corporate Giants. Banks are not named in the title of that book, but they're very much part of it. So we look forward to Richard's insight. He also teaches as an adjunct faculty at the State University of New York, at New York University. He's been a fellow at the Carnegie Council for Ethics in International Affairs, and he has a newsletter about the Japanese economy called Japan Economy Watch. With that, Toshiyuki, over to you.
Oh, I'm muted. Thank you very much, Nicolas, for the very kind introduction. My name is Toshi. I'm working for the FSA Japan. Now I'm head of the international department. Today I would like to talk about so-called strategic changes and policy developments in Japan's financial system, meaning that we are now advancing the kind of initiative to promote Japan as a leading asset management center. So I would like to provide a kind of overview of our initiatives to promote Japan's capital markets. We also, I would like to also touch on the latest kind of, increasing activities of Japanese megabank overseas. So I'm gonna share my document slides here. Can you see the slides, Nicolas? Okay. All right. So before explaining the details of our initiatives, let me briefly touch on the macroeconomic developments recently in Japan. So because it provides a context for our initiative. So also, as we see, Japan's economy is currently growing, at least in the near term. And many market experts attribute this increasing investor interest in Japan recently to mainly three reasons. One is geopolitical developments, such as growing tension between US and China, and events in Hong Kong, for example. A second factor is relatively good performance and prospects of Japan's economy, as I said, at least in the near term. You see that in this slide. And yet another factor many mentions as key is inflation. Initially helped by external shocks, Japan appears to be finally overcoming deflation. Cost-push inflation is peaking out, but it's going to be kind of inside inflation. Corporate sector is strong, and the wages have increased significantly at least in nominal terms. Of course, because of the impact of inflation, the real increase is relatively small, but at least nominally, it has grown a lot. Of course, Japan is faced by lots of problems. For example, Japan has a kind of bad reputation in terms of demographics. This is indeed the case and challenging, but this problem is not unique to Japan, actually. Put another way, Japan is the most advanced economy in terms of social challenges from which corporates and financial firms can learn from. And Japan has managed these demographic challenges relatively well so far, including by increasing labor participation among elderly and women. And we are also increasing the number of foreign workers as well. One of the key pillars of the government's policy agenda in the year ahead from this month is to increase flexibility of the labor market. So, helped by this favorable macroeconomic environment, Japan is becoming an attractive investment destination for investors. Both the Nikkei stock index and the TOPIX overall index has reached all-time highs recently, and this bull market is primarily led by investment flows from overseas investors, as you see on the right-hand side of this slide. Among the domestic retail investors, I'm sorry, this is not among domestic retail investors, a younger generation has been more active in investing than older generations. Investors in their 40s and younger who use tax-exempt investment account has been increasingly steadily. One reason might be that they are not traumatized by experiences with the stock market crash after the burst of the property bubble in the 1990s, or the great financial crisis, global financial crisis of 2008 and 9. I will explain the latest expansion of this tax-exempt scheme in the next page. So this is the page. It is in this context that we started an initiative to promote Japan as a leading asset management center in the world. We think the current juncture presents us with the golden opportunities to promote Japan's capital markets because deflation is coming to an end. When FSA is not just a regulator or supervisor, but we are in charge of financial policy making. That is different from other kind of regulators in major jurisdictions, for example, the Fed, OCC, or the US, UK, PRA, or FCA. So because we have a policy making kind of mandate, our counterpart, one of our counterparts, Treasury Department in the US or the His Majesty's Treasury in the UK. So that is why we are doing the policy work here. We think the current so this is a golden opportunity because Japan's deflation is coming to an end. While the FSA has taken a variety of measures to encourage households to shift their savings from capital deposits over the past 20 years, they have not been that successful, to be honest, because cash is king under deflationary economy. But now households and companies need to invest to protect or increase their savings and corporate value, respectively. So this slide shows the key concepts and the pillars of the initiative. So this initiative to promote Japan as an asset management center forms part of Prime Minister Kishida's new form of capitalism concept. An important piece of this concept is a virtuous cycle of growth and distribution, where some of the household savings that are currently held in the form of cash and deposit will be flowing to companies through financial investment in capital markets. The benefits of the investment will be returned to households through the increased corporate value of the companies, and that would contribute to further investment and consumption. This virtuous cycle is expected to contribute to sustainable economic growth and increased household income and a bigger corporate sector. The policy plan has three key pillars. One is the doubling asset-based income plan. It's very difficult to translate the Japanese words into English, but that includes the complete revamp of NISA in January 2024. So NISA is a tax-exempt scheme for retail investors, which was introduced in 2014 and modeled after the UK, United Kingdom's investment savings account, ISA. So N means Nippon, that is Japan, so Japanese version of ISA. So it was previously time limited, but was made permanent at the beginning of this year. It was also expanded significantly, and the people have a kind of confidence and comfortability in investment in growth companies, as well as indexed kind of investment trust products. This measure, expanded NISA, is combined with those to enhance financial literacy of households, including the establishment of a public sector corporations to strengthen financial literacy, and the enhanced conduct supervision of financial conduct distributors and investment advisors by the FSA. Second pillar of this policy plan, is for accelerating corporate governance reform. So we have been, advocating the reform, strengthening of corporate governance of Japanese companies since 2014 and 2015 by establishing a corporate governance code and stewardship codes. So we think that it has been implemented steadily, but at the same time, the cause, the reform needs to be implemented in spirits as well as letters. So we put together an action program for accelerating the reform, and I will explain to later. And the pillar of core kind of measure is the request by the Tokyo Stock Exchange to ask the listed companies to disclose their policies to increase the corporate value of their own companies. The third one, recently introduced, in fact, last December, was reform of asset management sector and asset ownership on the right-hand side. So I'm going to go and explain this one. I need to be quick, perhaps. So this following 2 pages describe this one, and that will be published and will be available publicly. So if you are interested, you can see that. So one is the reforming the asset management sector, rectifying Japan's specific kind of regulation or industrial practices to facilitate and promote new entry of new asset managers, both Japanese and foreign. And also we're going to do, we have already deregulated to allow asset managers to outsource middle or back office operations. The second piece is reforming asset ownership, in particularly public pensions. So now the government is in the process of developing a set of asset owner principles. That includes a kind of common principles for investment policy, governance, and risk management. So it is now published for public consultation. And as we also plans to enhance the transparency of the investment policy and investment portfolio of public pension funds. So third pillar is promoting investment in startups, because we need kind of risk capitals to encourage new companies to grow. And we also facilitate a kind of diversification of investment opportunities by asset owners and asset management companies by allowing a partial inclusion of non-listed equities in investment trusts. I'm going to explain the fourth pillar following shortly, and we're going to strengthen public relations and communications. We're going to hold a Japan Weeks event this fall. So Tokyo Stock Exchange requested the listed companies on the exchange to take these actions to analyze the cost of capital and return on capital. And the board of directors should determine strategies to increase the corporate value and disclose these kind of policies and measures, and conduct analysis about the progress made, and disclose the status of implementation. So some companies respond to this proposal, some doesn't follow with explanation. But if you look at the kind of numbers, those who responded to TSEC's request have performed better in the equity market than who have not. So admittedly, ROE of Japanese companies is lower than US or European companies. That means that there is room for further improvement in their profitability. Finally, I'll briefly touch on Japanese mega banks' expansions to overseas market. As you see that, Japan's total Japanese banks cross-border claims have been increasing steadily. And if you look at the share of the revenue from overseas of the Japanese 3 mega banks, it is more than 50%. Particularly, they are now being very active in the U.S. market. If you look at the Mizuho Financial Group, the share of the revenue exceeds from the U.S. exceeds the revenue from Japan. So Japanese mega banks are expanding their business overseas and getting increasingly global. So I will stop here in the interest of time, and I will be happy to take questions. Thank you.
Thank you so much. That was masterful. Richard.
Hi, how are you? I'm glad to be here. Let me speak about something a little bit differently than we just heard. What is the purpose of a financial system? The purpose of a financial system is to have good returns to the investors. But the part I'm going to talk about is to really allocate capital to its most efficient use. And I would argue that Japan's financial system is doing a very, very poor job of that. It allocates too much money to moribund small and medium companies or even larger companies, and far too little to the potential new entrepreneurs which create dynamism and create growth. And I think the financial system is one of the main reasons why Japan's growth has been so terrible during this whole 3 lost decades so far.
Richard, let me just interrupt you for a second. Toshiyuki, can you unshare your screen? Because at this point, we are back in conversation mode. Thank you.
Okay, so let's talk about shoring up incumbents and firms, and we can discuss the politics perhaps in the conversation period why this occurs. But in Japan, you have this whole bunch of small and medium companies, and they are shored up through the financial system in a couple of ways as sort of disguised unemployment. 12% of Japan's GDP is government loans or government guarantees of private loans. 12% of GDP, 20% of all small and medium enterprise loans consist of government loans or government guarantees. There's no other OECD country except for Korea, which comes even close. The typical is 1/10 of 1% of GDP. And most of them are companies that in a purely market system would go out of business because they're moribund, they don't earn money. The second way is there's a forbearance policy based on a law that the Diet passed back in 2009, but it's still in operation even though the law expired, which is If you have a company whose loans would be considered non-performing in the normal FSA accounting of this, if they have a plan to become performing over the next 5 or 10 years, then they can get loans rolled over and rolled over and rolled over, and forbearance on the principal repayment, forbearance on interest rates. They don't even actually have to say what the plan is. They just have to say they have a plan. And that was the FSA guidance on this, and it's still in force. So they're basically shoring up companies, not allowing it the creative destruction. And industries, the sectors that have the most level of so-called zombie firms have the lowest growth. So this is one of the major factors hurting Japanese growth. On the other hand, countries that have more entrepreneurship, more new, efficient, innovative companies replacing the old ones, grow faster. But you don't have that in Japan. First of all, banks are very, very hesitant to lend to new companies. In fact, they base an interest rate more on a company's age than its creditworthiness. So a 10-year-old company with a good track record will pay a higher interest rate, could be a percentage point or 2 percentage points, depending upon the era of overall interest rates, more than a 50-year-old company with a poor credit rating. That is stifling the emergence of new small and medium enterprises. And then you have 70 to 80% of these banks with their loans to SMEs, they require collateral or a personal guarantee, which is not only if the company goes bankrupt, it's not only the company's assets, but the owner's house, insurance policies, savings, and perhaps their firstborn child is given up for this, right? And so companies, it's very risky to start a new company because your personal value is at stake. This stifles the creation. Now, the FSA has created guidelines to reduce that reliance upon personal guarantees, but it's basically on new loans, which are just a few percentage of existing loans. So at the current rate, it would be 20, 25 years before you made a serious dent in the total outstanding loans. The FSA recently announced 2 years ago some plans to gear it up, and it'll take time to see how effective that is. I applaud the effort, but we end up seeing the results. The other side of it is before companies are eligible for bank loans, when they first start off, in most countries, are so-called angel investors. They're like venture capital investors, except they're for companies that will never get on the stock market. Japan has got very few angels. Prime Minister Kishida announced an angel tax break, which was supposed to promote them. And it's very, very poorly designed. There's one in France that's been around for 25 years. It's extremely successful. And the difference between the successful French system and what I think will be a completely unworkable Japanese system is that in France, you invest in an angel fund. It's like a mutual fund in the stock market. So even though most startups fail, the fund as a whole makes lots of money, 2, 3, 4 times your return on your investment, because the few companies that do succeed very, very well. In Japan, you are forced to invest in an individual company. It's far, far riskier than an investment in the stock market. And so it's very poorly designed, and it would not have taken much of a tweak to design it in the proper way. Why they didn't, I've never been able to get anybody to explain to me. So what I would argue is that there's lots of financial reform that needs to be done. What Japan needs is not to try to make itself a financial center. They've been talking about this for 2 decades, but rather have the financial system actually do its job, allocate capital to its efficient use, and give good returns to the saver/investors. I can't hear you.
I don't know. Normally, I'm disciplined with this kind of thing. I don't know what's happening today.
Okay.
Thank you so much. Lots of food for thought. Toshiyuki, do you want to react to some of Richard's admonitions?
Yeah, thank you very much, Dr. Katz, for your very straightforward comments. I see a lot of points from your comments, and indeed, government is aware of most of the issues and trying to address these issues, and the FSA is of course part of that. but because Japan is a kind of consensus-based countries, and can try to avoid kind of disputes and some controversies. Many people from us overseas tend to think that Japan is really slow in moving into the right directions. I would take that criticism. But at the same time, Japanese government is, and particularly the FSA, is doing what they can to make the financial system more efficient in terms of allocating capital to more productive sectors. I think that this initiative is part of that strategy, in the sense that it will promote the development of capital markets and promotes the kind of investment flow through the capital markets, not through the kind of indirect banking sector, which needs to take care of the depositors' interest as well. So I think this is one of the part of the strategies to improve Japan's financial system. On the issue of the current tendency so far to keep SMEs, unproductive, unviable SMEs intact. My personal view is that it has a lot to do with the sort of government kind of policy directions over the past 30 years to require companies to protect the employees' employment. So in that sense, keeping companies alive was given a priority in order to protect the employment of the workers. So that may have created a lot of kind of incentives, wrong incentives, in order in terms of making markets mechanism work. But we are the current government is now indeed also maybe not kind of overtly, but maybe quietly, silently, I don't know, moving kind of trying to introduce kind of measures. As I said earlier, one of the key pillars of the Basic Policies 2024, which is the government's kind of economic policy agendas for the year ahead, is the labor market reform, including the strengthening the kind of reskilling facilities programs by the government and the private sector, in order to reskill the kind of workers so that they could move to their other kind another new work. And so the government is now taking steps to making labor market really flexible. That would be expected to work in the direction of what Dr. Katz said, in terms of allocating capital more kind of efficiently to productive sectors. But thank you very much.
Richard, thanks a lot. Richard, I'd like to ask you about the last bit of Toshiyuki's presentation, which is this expansion abroad of the large Japanese banks. In your narrative of the things that keep Japan below its potential, is that good news or bad news to see the mega banks expanding internationally and having so much expansion in the US in particular?
Well, I think we have to ask why they're doing it. Because the government has favored companies over people. It's cut taxes for corporations. It was 50% was the highest marginal rate. Now it's about 30%, while raising consumer taxes. That's helped suppress consumer spending. Consumer spending now is below what it was 11 years ago in 2013, real consumer spending, even per capita. And so if the market's not growing in Japan, then companies are not investing in Japan. So investment is very, very flat in Japan. Companies have got tons and tons and tons of cash that they don't know what to do with. And they're given more tax cuts on this. And so there's not a lot of demand for loans from the big companies, from these mega banks, right? So if they're don't have a demand for loans in Japan, then where are they going to find how they're going to make money? Then they're going to have to lend outside. And so I would say that the mega bank strategy of emphasizing loans outside of Japan is an artifact of the whole supply-demand macroeconomic problem in Japan. That consumer spending is falling because real wages have been falling and their taxes have been hiking. Companies don't need to invest for the internal market, so they're investing overseas. And they've got cash, they're not borrowing. And that's why one of the reasons interest rates are so low is not just BOJ policy, but the actual demand for loans from the banks is down.
Toshiyuki, I'm particularly interested in this dynamic between domestic and international in Japan. So I will ask you a few questions about this. But first, staying with the expansion abroad of the mega banks, how do you manage that in terms of financial stability? I mean, we've seen in other contexts that when you have your biggest banks that expand a lot overseas, that leads to major challenges of supervision. How can you, as a supervisor, be confident that you have a holistic view of the risks in the banking system when so much of it is outside of your territorial remit?
Yeah, that's a good point. And honestly speaking, the Japanese financial institutions overseas strategies for the past 30 years has not already necessarily been a kind of success stories. And in terms of supervision, we are, doing our best to cooperate with foreign supervisors, particularly supervisors in the U.S. because they are expanding their activities in the U.S. But on this side, we are really benefiting from the recent technologies like Zoom or WebEx, so that we can communicate with the U.S. authorities almost on a weekly or daily basis as needed. And so, in terms of information collections and and the governance, overall kind of global governance, things are getting a little bit easier for us. But at the same time, as the banks are expanding their business overseas, that could lead to a kind of more complicated group structure or kind of booking structure or something. So we need to have keep a close eye on their activities, including through further collaboration with foreign supervisors.
On a fundamental level, Richard concluded his initial remarks with this view that Japan doesn't really need to be an international financial center. What it needs is to have a better domestic financial system. And there have been a lot of debates. I mean, from where I come from, Europe, we have this debate about capital markets union, which in a way shares some characteristics with the discussion in Japan about capital markets development. Can you elaborate a little bit more on how you see the interplay of between international and domestic financial activity in the way the Japanese system allocates capital, and also something you haven't commented too much on, which is the role of foreign financial firms in the development of the Japanese financial system? Toshiyuki.
Question to me, please say it again. I'm sorry. You are addressing the questions to Richard, and I'm sorry. Please, could you repeat the question?
Well, so my question is really picking up on what Richard said about what Japan needs is a good domestic financial system, not being an international financial center. My question is really, what's the role of foreign firms in Japan? How do you see the dynamic between this cross-border component of the system and the need for domestic reallocation and reform?
Okay. Thank you very much. I'm sorry for my absent-mindedness. I think foreign financial institutions can play a kind of useful role, significant role in making Japanese markets better in terms of instilling a sort of kind of different sort of approach to financial services. this may be my personal view, but because of the so-called lost decades, 3 decades, I don't know how many decades, and Japanese financial firms, corporation households, they are so used to almost zero interest rate environment. And as Dr. Katz said, lots of kind of for measures have been introduced, including the credit guarantee to SMEs, for example, and that may have kind of lost the kind of incentives. The financial institutions may have lost the kind of incentives to sophisticate their kind of risk management or credit kind of rating sort of technology techniques.
That's right.
So in that sense, entry of foreign financial institutions might provide sort of Japanese financial sector with opportunities to re-import these sort of advanced techniques in terms of financial services in order to, for example, identify growth firms and how to distinguish good firms or bad in a more kind of positive interest rate environment. So that would be a positive part of it.
Richard, on this?
Yeah, I suspect, I think Miyoshi-san has got a problem. He has his personal views, and then he has also his official responsibility, what he has to say. I suspect if he and I sat down for a beer together, we would agree more than we disagree about what needs to be done. Having said that, and I agree with his analysis about the labor issue, which is that it's since they don't have an overt social safety net that they need, keeping bad companies alive is a kind of the social safety net. The entry of foreign firms, financial firms in Japan, has actually been a bit of a disappointment. The hope after the 1998 Big Bang in Japan, and foreign firms really were allowed to come in and play a big role, was that they would do things that were more efficient. They would allocate capital better. They would have more profitability. Customers would want to work with them. They would sort of begin to encroach on the market share of the traditional Japanese banking system banks, and those would have to change their policies. So, for example, the Japanese banks have been so focused on collateral as the basis of lending, they have not really trained their personnel well in credit evaluation in terms of projecting cash flow, the kinds of things that's very, very normal for international banks. But what seemed to have happened is that the foreign banks adopted this, and investment banks adopted this kind of a when in Rome, do as the Romans do. And so they haven't really made as much of an impact on helping Japan's financial system restructure as one would have hoped. So that's a disappointment, because in most countries, foreign direct investment is a key part of overall reform. When the Japanese auto companies came to the United States, one of their effects was to really improve the performance of the Detroit automakers because of their competition. So all countries need foreign direct investment. On the financial side, it did not work as well in Japan as certainly I hoped, and other people and people in Japan had hoped.
On why it was the case? I mean, why did these foreign firms not do what you and others hoped they would do?
Well, here's the explanation I was given by an American executive who's been in Japan for about 25 years, really knows Japan really well. That Japanese employees will come to, say you have an executive who's sent from Europe or the US, and they're there for 2 or 3 years. Their subordinates, are Japanese, who say, well, you can't do it this way. This is how we do it in Japan. And since they don't know that much about Japan, they accept this advice. There are exceptions, of course. Carlos Ghosn was a gigantic exception. And that's a whole Greek tragedy there. But this fellow, who's an American, but who really knows Japan, for decades, and he's now heading a financial firm in Japan, says, they come to me and they say, we can't do it. And I say, yeah, we can. And so it's partly it's a personnel issue. And So that I think is one of the reasons why it just hasn't happened. And sometimes companies like to take the path of least resistance. I mean, it's not their job to reform Japan. It's their job to make money. If they make money by doing things better, that should have an impact. But I think because of the personnel issue, it hasn't worked out that well. Maybe Miyoshi-san has his own theory about that, but that's what I've been told.
Toshiyuki.
Okay, thank you very much. And perhaps, it may be the reason of the past 2 or 3 decades of, lost decades or something. But as a government official, and I must say that this time will be different, as Deputy Governor Uchida said about monetary policy. So as far as FSA is concerned, we have introduced lots of policies, including, of course, corporate governance and the code and stewardship goals. And our kind of aim is to instill a kind of more market discipline between in the relationship between the company's executives and shareholders. It may be there used to be that kind of, sort of less situation where, company executives or bosses are not under huge pressure or market discipline. But what the FSA is now doing is to, asking the company's board of directors to and the executives to think about really seriously about the strategies to increase their corporate value and improve risk management practices, set a target, and disclose the status of implementation, as I said. So that is what I said as, instilling a spirit of corporate governance reform as well as the forms of corporate governance. So it may take time, that we hope that it will bear fruits in the coming years.
So Toshiyuki mentioned the obstacles to entry into the asset management industry, and I'd like to zoom in a little bit on that. Can you be more specific? Is it that the channels of distribution of savings are overwhelmingly controlled by the banks and insurance companies, and therefore all the asset management is done in-house by banks and insurance companies, or is it other obstacles? I mean, can you give us a more kind of descriptive view of what has been preventing the asset management industry from developing the way you'd like it to?
So as far as assets management sectors are concerned, lots of asset management major asset management companies in Japan is part of the financial groups of for example Mitsubishi UFJ, Sumitomo Mitsui and Mizuho and others. Nomura or Daiwa, for example, and they are part of the group. And it has been said that the kind of personal rotation of these companies are really bank-based, so that people without sufficient asset management sort of experience or expertise are assigned the job of head of the asset management company affiliate of the financial group. So we are asking the FSA is now asking the financial groups to articulate their own strategies and to assess whether their asset management arm is working for the best interest of their beneficiaries. We asked those groups to come up with the sort of strategies to promote this sort of more kind of disciplined relationship with the beneficiaries. And that would include, of course, as I said, more enhanced transparency about their work, kind of more kind of sort of independent kind of assessment of their performance. And on the other side, we are encouraging households and investors to nurture their own abilities to select asset management companies. So it may be a kind of soft approach, but And we are making efforts to make that happen.
I hear a lot of echoes from what I know from my country of origin of France. Richard.
Yeah, I would like to have a proposal here. You know, one of the things about Japan is well known is that the share of stocks held by households is very, very low, both as a share of the total stocks out there, but also as a share of household savings. Most of their money is in banks, insurance policies, whatever. Now, I think there's a tax measure, which the finance ministry would, of course, oppose, but I think would help a great deal, which is that you're taxed equally on whether you receive your profits as a shareholder from dividends or capital gains. And the way the system works, it really benefits companies if people take it in terms of capital gains, hoping the share price will rise. But it's been very, very volatile, and naturally people are scared. What I would do is take a tax on the dividends and make it the same level as the tax on people's income tax, or even make zero out. And what we would do is create a whole bunch of high dividend companies, that companies take their huge profits, instead of doing share buybacks, which have problems for all sorts of reasons, or just sending it abroad, or just, their own financial assets, they would distribute it in the form of dividends. Nomura and other people could certainly have, mutual funds, which already exist to a certain extent, of high dividend shares. So in a sense, it would be a high dividend mutual fund is almost like a savings account, but it's risky. It's more risky, but it's distributed, so it would work. And I think that is something that would really help induce householders to put more of their money into shares, so they would really gain a benefit from these high profits that companies are earning. And, when you have to pay a dividend, that takes real money. There's all this money that corporations have hoarded up in their bank accounts. It's like leaving land fallow for years and years and years. Get it back into the economy. Will add to the purchasing power of the consumer and therefore help growth. And so it would change both consumer household behavior and change corporate behavior. And it's the kind of thing that Japan should do. It's also the kind of thing the Ministry of Finance would oppose. But a strong prime minister, that we've seen from the record, from Abe Koizumi, is able to overrule the bureaucrats when they want to.
So that prompts a question, which just shows my ignorance of Japan. But Toshiyuki, you mentioned that the FSA has more of a policy rules than in other jurisdictions, but much of what we're discussing is tax policies and tax incentives for the direction of savings. So on these tax provisions, does the FSA also have more of a rules than in other places? Does it have a strong advisory role to the Ministry of Finance, for example? Or is it basically outside of the decision-making loop? How would you describe that feature of the Japanese system?
So in Japan's government, line ministries and agencies put the kind of tax amendment proposals to the Minister of Finance by the end of August. And then, it is the Ministry of Finance that examines, individual proposal and make a decision about whether to take it or not take it. So in consultation with the ruling party politicians and ultimately the finance minister and the prime minister. So it is Ministry of Finance purview based on the requests from line ministries, including the FSA.
And the FSA has the rank of a line ministry, right? Just to clarify.
Yeah, so FSA is one of the line ministry in the context of tax policy.
One question I have is something that was on your slide about promoting investments in startups. Can you elaborate a little bit on that? Because that's something that's also been debated in many other jurisdictions. We had a session recently of this series comparing initiatives in China with those in Europe. And I'm very curious to know how the debate is framed in Japan on, how to have more investment in high growth, innovative young companies. Toshiyuki on that.
That is a very challenging issue, not only in Japan, in other countries too. But what we have been doing now is to kind of, gather the experts to kind of put together a sort of, sort of guidelines or something in order to promote venture capital funds and how, how to nurture these funds in Japan. And we are thinking about kind of deregulation measures to promote investment crowdfunding as well. And another area is to promote the issuance of and circulation of unlisted kind of securities, because there are a few kind of there is very small unlisted securities market in Japan compared to other major jurisdictions. So that may be a kind of way forward to it. So we are thinking about measures to kind of promote this sort of unlisted securities market.
Sure, that's squarely in your last book. So how do you see the development of venture capital and private equity in Japan? And do you have any strong views on what the Japanese government might do differently?
Yes, I have lots of strong views. Yeah, I mean, I think the single biggest obstacle to the growth of innovative new companies is their lack of access to outside credit. So you have to be basically very rich or have access to friends who are rich to do a startup. So as a result, there are lots of startups in Japan, which I don't mean just the companies that will go on the stock market like Silicon Valley. I'm talking about tens of thousands that you would have, say, in a country like the US or in Korea or in Europe. And so they don't have access to this finance. And the problem is that a lot of it, it's government policy, again, to shore up incumbents. So, for example, they do R&D. Well, 92% of Japan's R&D aid to companies goes to large companies who don't need the money. It doesn't go to startups. The various kinds of a whole list of tax incentives and tax measures that would help startups have not been done. So there's lots of talk. Prime ministers are very fond of saying, I will boldly do X, Y, and Z. And every time they say boldly, it's not going to happen. So I mentioned this angel tax break, which all Japan had to do was copy what France had done, what the UK had done, what many US states have done. It would have been terrific. They didn't do it. And I had a talk with people at METI back in 2022 when they're developing the specific proposals, when Kishida was promising this Glorioski thing for startups. So typically it would be METI, which would make proposals, say, here are the kind of tax breaks we want. And again, as Miyoshi-san said, hand it off to the finance ministry to approve or disapprove. But METI is very strong. Well, Kishida was not a strong prime minister. He said, you guys figure it out. So he stayed out of the fight. And I went to a senior official, and it so happened at the time, Kishida wanted to raise the defense spending and pay for it in part by recalling a bit of the tax cuts for big corporations. And the media executive said to me, well, our number one priority is to prevent any tax hike on big corporations. And so what about all the stuff for startups? No, our number one priority is to prevent this. And there was a deal. METI proclaimed that if they give these big corporations tax breaks, they would invest more, and they have not. And some people at METI will talk about that, but that remains the policy. And so all kinds of things are stifled because of the ideology of the finance ministry that any tax break is bad, and the pro-incumbent feeling of METI. So the problem isn't a lack of really feasible solutions. Japanese experts know tons of solutions. The problem is the political obstacles to getting it done.
Toshiyuki, one thing that other jurisdictions have done, not the US, which has a lot of venture capital, but others that would like to have as much as the US, for example, in Europe or indeed in China, is to throw public money at it and create government-owned or government-controlled venture capital funds or funds of funds, including at the European Union level, we have the European Investment Fund, etc. Is that a thing in Japan, or are you shying away from that course of action, which personally I think would be a good thing, because I'm not sure government bureaucrats are very good at venture capital, but that's a personal opinion. So how is that playing out in Japan?
I'm not sure it is venture capital per se, but Japanese government has established a lot of funds to stimulate investment in sort of high-tech sectors or other things and various sectors, including sort of with the aim to stimulate the kind of risk money into not really small, but sort of viable companies. But again, many of them are not really success stories, and they lost a huge amount of money, taxpayers' money. So one of the factors might be the kind of lack of expertise in investing in these sort of sectors. But it wouldn't have kind of good reputations or kind of political support for it right now, because some of the predecessors have lost a lot of taxpayers' money.
Interesting. We're to the hour, but I would like to ask a last question. Maybe Richard, very quickly on this. Yeah, I see you. Did you raise your hand? No.
Yes,
Okay.
I want to respond to the venture capital.
Yeah.
I don't think the government in Japan should do it. It has a very bad track record on it. I think,
Okay, so you agree with what Toshiyuki said?
Yes, absolutely, but for a different reason. When the U.S., but what actually had the U.S. venture capital industry take off was when there was a law that allowed Social Security pension funds, not government Social Security, but pension funds to invest in them, and that gave them access to lots of capital. The problem in Japan is that 80% of the venture capital for enterprises in Japan are actually corporate venture capitals. In other words, Mitsubishi Heavy Industries or Hitachi, whatever, Sony will set up their own venture capital fund. Now, these are salaried people who spend 3 years doing venture capital, about which they know nothing. And moreover, their client is not the company in which they're investing. Their client is Sony or Hitachi, whatever. So they're not out there to promote the growth. What you need is more of these independent venture capitals. What I would say is take part of the government pension fund, which is huge. And they've done this a little bit. And you could take government money of these pension funds or the private pension funds and have them invest in independent venture capital funds, a lot of which are created by former entrepreneurs who know what they're doing, and provide them the capital, let them do the job.
I'd like to ask the last question, and we won't have much time to address it, but just because I'm so curious about it, about the kind of invisible part of the Japanese financial system, which is all these regional banks. So we talked about the mega banks, we talked about brokerages, but what about all the other banks? They're huge in the systems. They represent a lot of those loans to zombie companies that Richard denounced. Is there any reform of that part of the system, or is it just humming along fine? And maybe Toshiyuki, any other word you would want to say in conclusion?
We are aware that the regional banking sector is a kind of huge challenge for us as well, as well as themselves. Because of the shrinking population, particularly in rural areas, and lack of opportunities to lend. So we are kind of putting in place a sort of environment to facilitate consolidation of regional banks. Of course, the decision is up to the regional banks themselves. But our role, IFSA's role, is to put in place a kind of environment where they can make a decision to do consolidation. So the facilitating consolidation is our work as of now. But they have faced a lot of challenges indeed.
Thank you so much. We're at the hour. This was extraordinarily enlightening, at least for me, I guess for our audience as well. I'm super grateful, particularly to Miyoshi-san for staying so late at night in Tokyo, but more substantively for being so candid and so transparent with his insights about the financial system. So very grateful about that. and to Richard, who is always candid, for his candor and insights as well. Our next session will be on July 24. I will host Claudia Buch, who is the new head of banking supervision in the Eurozone as the chair of the ECB, European Central Bank Supervisory Board. I also will participate in the session Karen Petru, who was in the series before and is a great specialist of supervision in the US. So we will have a kind of a critical look at how the ECB is doing on supervision and how they're changing their practices. Thank you again so much to Toshiyuki Miyoshi and to Richard Katz for a very, very insightful session. Have a great rest of your day.
Thank you for having us.
Thank you. Bye-bye.